Good afternoon. This is Oliver Slope of Blue Line Futures coming to you with another episode of the 2-Minute Drill. Today is Wednesday, May 17th. Last week we did something new in the studio. Had full intentions of doing that yet again today. Babysitter called in sick, so I'm working double duty and was unable to get into the office downtown. So watching the 6-month-old in the markets today has been nothing short of exhilarating, to say the least. A lot going on both fronts, but let's focus in on the markets. Run through today's prices real quick. July corn down 19 3/4 at the close, 561.5. The new crop December contract fared significantly better, only down 6 1/4, settling below $5. The settlement $4.99. July soybeans 27 cents lower, 13.37. New crop November down 19.5, 11.87.5. Moving on to the wheat markets, we had July Chicago down 22, July KC down 9 3/4, and July spring wheat down 19. So a lot of red on the screen, and a lot of that came on the headlines that the Black Sea grain deal had been extended, on top of some cancellations of exports from China this morning. 272,000 metric tons were canceled. That's about 10.7 million bushels. That, coupled with what we've been talking about for the last several weeks, good weather throughout much of the Midwest and lack of demand, and the Black Sea grain deal getting extended, that's a big headwind for the market to overcome in a day like today. So we've got two markets in the 2-minute drill, soybeans and cotton. I hope we can get the cotton because that is a little bit of a silver lining there, but we'll get things kicked off with the soybean market. Get the shot clock started. And we've got July soybeans pulled up here. This is the blue lines are basically what we've been looking at as potential support and resistance levels for the past several months. We broke down below this 1385, 1380 level, and that really opened the door to some accelerated selling pressure, which took us back to this gap from July 6th. We tested and held that yesterday, and I thought that was going to be a little bit of a silver lining coming into today's trade, but we broke and closed below there, obviously, but I think the breakdown below there is what really triggered the stops and really started to see snowball that long liquidation. Now, where do we go from here? Well, I'd like to say that we're oversold. We are. We've got the RSI down here at 26.59, which is in oversold territory, but typically, you see these big down days and moves of 3 or 4. At least we have many times before, so I wouldn't be surprised to see additional selling pressure into the market as we head into the back half of the week. On top of that, there's just really not a whole lot of good support here in the market, and when we're looking for support and resistance levels, we look at previous interaction between buyers and sellers, almost like a roadmap, and you really don't have that until you get down to the $13, $13.10 area. So that's going to be an area to keep an eye on. I would like to be a buyer fairly aggressively, but again, I think that you're going to have to be patient in this environment and stay patient, wait for a better risk-reward setup rather than trying to catch a falling knife here. Now, moving over to the cotton side of things. Cotton, big up day. We've traded out and closed above the 100-day or 200-day moving average, which is this yellow line. That's the first time we've seen that happen since September 12th of last year. So that is encouraging, but we still got a little bit of work to do. 88, 88.5 is the recent highs. If we can get out above there, I wouldn't be surprised to see this market continue to climb up into the mid-90s, potentially make a run at that 100 level. So that's it. That's 2 minutes on the dot yet again. If you've got any questions at all, feel free to reach out. Give me a call, 312-837-3938, or email Oliver at Blue Line Futures. As always, futures and options involve substantial risk of loss and is not suitable for all investors.